The Bulls versus the Bears. Get in the game. www.tackletrading.com.
Hello everybody, this is Noah Davidson with TackleTrading.com. Wanted to take a minute, getting excited about this trading week and just up doing some work. And I thought I'd share with you a fun stock pick. Gino's got the scouting report out. Awesome. Great picks. Had a chance to look at them. I just want to add one more to the mix. You know, the S&P is interesting this week. Trading down into this little mid zone of the index here. Let me kind of pop open the index here. Let's go weekly time frame and look at just where we're trading in the channel. We're kind of in that trend zone. Now, we could see reasons for the market to rally off of here. We can see the reasons to kind of not. And I can see this market going either way. Interesting volume as it came down hard. Boom. Inside Harami here on the spider. So we got a Harami on the spider on above average volume. So that's interesting. We have the, let me look at the futures here. And with the futures, it's more of a piercing line, kind of a double bottom piercing line above average volume. And I'm a little suspicious of it. I'm not sure the market's going to full blow rally out of this. To kind of put into perspective what I'm thinking here, let me pop open the index. And really, from a daily perspective, we're kind of in the middle of the trading channel. So daily chart, I'd say, okay, look, here's the bottom of the channel, ballpark, and we obviously have known top part of the channel. And then you get this kind of mid part of the channel where sometimes it's support, sometimes it's ballparking in the middle of that range where kind of in the middle. It's kind of a you can pull multiple levels on this, like here through here. You can get these peaks at the lower part. So you can go like resistance, boom, resistance, support, support, ballpark support, boom, resistance, resistance. And it kind of, you can pull multiple technical levels on channels. And we're kind of in the middle of the channel. We could see whether it's going to cross all the way down or if it's going to rally back out. And sometimes we rally out of the middle and sometimes we cross down the whole channel. And I really equate where we are trading right at this moment in time very, very similar to where it was in here, where it's kind of stalling here in the middle. And honestly, I can see this market going either way. So having that scouting report for both directional trades, non-directional trades, and for your theta trades and whatnot, I would be able to say we could run some bullish scans this week. We could run some bearish scans this week. And I ran a bullish scan, and I found a couple candidates that I do like. I like CME for a bullish retracement, and we got higher highs, higher lows, higher highs, higher lows, big increase in momentum. Let me go ahead and add my volume study here so we can kind of demonstrate what I'm looking at on the volume. And really kind of see strength in the rally, diminishing volume on the sell-off, and a spike in the volume as it came down into our buy zone as it pulls down. This is what we refer to as the bull area down here, below 13-period moving average, above a 20-period moving averages. You'll sometimes hear different moving averages used, but ballpark, it pulls down into a buy zone. I'd like to demonstrate for you a fun concept that I like as a trader, as a technical trader, which is called a Fibonacci Confluence. And what a Fibonacci Confluence is if I were to measure the minor wave cycle and look at what we're trading, bam, we're trading right down here at 50%. 61.8% is a big number. So what you can do is you can kind of nail down that zone here and maybe this zone here. And you can draw enough lines on a chart, you hit something. But really what I'm doing is I'm measuring the minor wave. I can pull this down into the intermediate wave. And at the intermediate wave, I'm hitting that support zone, and bam, look at that. I'm going to take this number right here and pull it right up, and it's 38.2% from the intermediate pivot. And if I pull this down to the major pivot, bam, we get another third vote for the same price point. So really what a Fibonacci confluence is is when the minor, intermediate, and major wave cycles of an Elliott wave coincide in the same zip code. And that's one of the reasons we'd see, you know, we got the hammer candlestick in here. And I like these for great short-term technical picks. Doesn't necessarily mean it's going to be a long-term run. It's got a potential probability for support, really kind of contingent on whether or not the S&P is finding support. But that hammer candlestick in there, which is a beautiful inside candle hammer, down off that low, and really kind of what I'd be looking for is some confirmation up. I want to see it trading above $80.20. I like to take these down into about 30-minute time frames. And here's, look, there's our W pattern. I'm looking for a break above the W to really confirm that this is a buy. And one of the other things I'd want to do is make sure that the S&P was trading above its daily candlestick high as well. So I could place a contingency order for the stock, also place the contingency for the stock, and use the TOS order entry right here. I could go in and say, okay, hey, let's take CME and let's do this. Let's buy the stock price here, but let's do a bracket order. Let's do a first triggers OCO, and let's do this a quick way. Let's go up here and go right click. Try that one more time. Right click, buy custom first triggers OCO with an OCO bracket, and I can come in here and say, okay, let's do a buy stop limit, and I want to see that trading above that daily high. Let's go with the chart one more time here. So I want to see it trading above the high price of $80.16. So I could say, okay, let's buy if it goes above $80. Make sure I got that right. $80.20. So buy if it clips above $80.20. But don't spend more than $80.25. I could say 25. Bam. And then I could say, however, make that contingent on the spider. Let's go with the mark trading at or above, and let's grab a chart of the spider, and let's say I want to see that trading out above high price of 198.39. So 198.39, saying I want to see that out above the high price there as well. I'd say, you know what, if we see it trading out above 198, let me take that one intraday too. I just want to see that market moving out above 198.55. The high price out here, bam. Yeah, I'd be okay with that. So let's go with 198.55. Just make sure it's trading out above that ballpark price point. And that gives me a second point of confirmation. So contingent on that, and then I'd say, you know what, I know the target out there. Let's sell it when it gets to 85. Hard target. And let's do a trail stop. ATR is about $1.50. Let's do a minus $2 trail stop. So let's go minus $2 on the trail stop. I can make those good for the day on the buy. We'll go good till canceled on the bracket. So see if we can get in on that. If it goes above 80.20, I'm going to give that a few more cents here. And if it's got that contingency, so here's kind of what it says here. Kind of a fun one. Buy if the CME is at or above 80.20. There's a contingency on the SPY being above 189.55. 198.55, excuse me. And giving me that second point of confirmation. Just thought this would be a fun one to share. Noah Davidson with Tackle Trading. We will see you this week in the clubhouse. Got a lot of fun stuff coming down the pipeline for you. And we look forward to seeing you there, sharing your trading ideas and sharing your success stories and experiences together, making it a lot more fun to work together as a team. Loved the newsletter this week, Matt. Great job on that, talking about teamwork. That's fantastic. See you guys on the flip side. Noah Davidson, TackleTrading.com.
Get in the game. www.tackletrading.com